Hello there, welcome back to Accounting Space. In this video, we want to look at a question paper of November 2024, and this is the recent question paper that we have. So, we are going to look at the question on the preparation of the statement of comprehensive income, which is the income statement. So, we are going to go through our question, which is our question 3, according to the question paper of November 2024. So, the question reads, you are provided with a pre-adjustment trial balance GRU traders on 30 June 2021. So on the required parts, we are only going to look at part 3.1. That is on the preparation of the statement of profit or loss and other comprehensive income for the year ended 30 June 2021. And our question is got 36 marks. So going through information given in the question, you are given a pre-adjustment trial balance on 30 June 2021. So where it's starting and where it's ending. So in this regard, we have got the ending date being 30 June 2021, which means our financial year started the previous year, that is 1 July 2020, and it's ending 30 June 2021, which makes 12 months. So this is what we have. So you need also to go through the information given in the pre-adjustment trial balance before you attempt the question. So this is the information given in terms of the nominal account section and also the balance sheet account section. So moving on, we are also given adjustments and additional information. We have got information 1 going down to information 8, where information 8 is the last information that we were given. So you also need to go through each and every information that you're given so that you can be able to allocate where adjustments need to be done as you go through your statement of profit or loss. So on our other section, we have our other section here, whereby we have got a statement of profit or loss and other comprehensive income for the year ended 30 June 2021. So very important for you to take note on where are we supposed to start and where are we supposed to end. So obviously, you need to know the layout of preparation of the statement of profit or loss. So you take note that you are supposed to start with your revenue. So you are supposed to start by entering your revenue according to information that you are given. So I'm going back to our information. You are going to see that you go through your nominal account section. That's where you find the figure for revenue. So you have DA is 699,800. So before you enter this figure, you need to check for any data allowances that are going to reduce the figure for our revenue or our sales returns. So we'll check then according to question, according to information that they're given, but you see that we do not have any of that. So when you have exhausted in terms of what you are having under the nominal cost section, you also need to proceed to enter information and try to see if there's any adjustment that is going to affect our revenue. So according to our information, we don't have, but if we had any information that was going to affect our revenue, we are supposed to adjust and then put the net figure. So in this case, we don't have, so we are going to check the figure as it is 699,800 and transfer it to the statement of profit and loss. So we are saying the figure that we have is 699,800. So from revenue, we are supposed to go to less cost of sales. Less meaning subtractive, so cost of sales. So in some questions, you'll see that the figure for cost of sales you'll be given it in the nominal cost section. But if you go through our information according to the question, we do not have a cost of sales. So in that case, you are supposed to calculate it. So remember the formula that we are going to use to calculate your cost of sales. We're going to say cost of sales is equal to your opening inventory. You get your purchases. You subtract purchase returns if they're there. If you have any settlement discount receipt, you subtract again. Settlement discount receipt, you subtract. And any carried on purchases, you are supposed to add them. Carried on purchases. And finally, you subtract your closing. You close the inventory. So this is what we are going to go through as we calculate our cost of sales. So we start with our opening inventory. So opening inventory, given it under the balance sheet account section. That's where you've got your open inventory. So if you take note, it's inventory on 1 July 2020, which is at the beginning of the period that we identified year as our beginning debt. So this becomes the open inventory 48,608. So come here. We are saying our opening inventory uh, 48,680. So from there, you are supposed to add your purchases. So yeah, we are adding to a figure of purchases, we are adding into our inventory. So we say add purchases. So obviously we go to our nominal cost section and try to see the figure for purchases that we have. We are having 356,900. So, but we see that the net figure is the one that we are supposed to put after you have subtracted your purchase returns and also your settlement discount receipt if you have them in the question. So if you come here, you see that we have purchase returns 16,400. We also have settlement discount receipt is 11,500. So it means we are going to save 356,900 minus 16,400 minus 11,500. So we just come and summarize that, whereby in brackets we're going to say 356,900 minus 16,400 minus 11,500. And then if you calculate correctly, the net figure that you're supposed to get is 329,000. So from adding purchases, you're supposed to check if we have got carriage on our purchases. We try to see according to information we have got. We're seeing carriage on sales. So if you go down, you see that we have carriage on purchases here, which is a figure of 19,650. So come here. So this is our area. Then from there, whenever according to our formula, after adding carriage on purchases, we also check if we've got import duties. Import duties according to our question, import of customs duties. You see that according to the information given, we have import duties here. It's also going to increase the cost of purchases. We have 70,500. So we include it again here. It's our import duties. So the figure for import duties that we have got 17,500. So this is what we have, and then from there, we straight away we are supposed to subtract your closing stock. So we can say yes, let's closing stock, and then closing stock we are supposed to find it in the additional information, whereby you take the for your inventory, which is 48,300. So 48,300 is going to be your closing inventory. So you get 48,000. And we take note that we are saying less, and whenever we say less, we are subtracting. So you put brackets to show that you are subtracting. Then from there, we are supposed to close it so that we can find the net figure, which is going to be our cost of sales. So this is what we have. So obviously, by saying 48,680 plus 329,000 plus 19,650 plus 17,500 minus 48,300, you get the net figure of cost of sales, which is supposed to come here is 366,530. So we are saying 366,530. And again, this figure we're saying less here. So you can show by putting brackets that we are subtracting. So this is what we have. And then we now say revenue minus cost of sales. And if you do that, you are supposed to get the figure for you're supposed to get the figure for gross profit. So here we say, and the figure for gross profit that we have is 333,270. So this is our gross profit. So for the gross profit, you are supposed to have your other income, and of course your other income, you are supposed to add them to your gross profit to get the figure for gross income for the year. So other item beneath the heading of other income, then the total becomes in line with our other income. So we check in terms of the question, what other income do we have? So we can have start here. You see that we have interest on fixed deposit being the first one, which is 29,000. But of course, when you are entering these expenses, costs, and these incomes, we are supposed to check into information if we have got any adjustment that is going to affect our fixed deposit. And if it's there, you adjust before you put the figure and put the net figure. So on interest on fixed deposit, we have got 29,000. So we also have to take note that what we are given under the nominal account section, if it's an expense, it means it represents what was actually paid, but it doesn't mean it's what is supposed to belong to the period. So what we enter in the statement of profit or loss is what is supposed to belong to the period, whether paid or not, if it's an expense. So if it's an income, we are saying what was supposed to be received, whether received or not. So that's why we adjust for accruals and prepayments, and that is in advance and owing. We are trying to, in the case of prepayments, we subtract prepayments because we are saying we receive if it's income, we're saying we received something in advance which does not belong to this period, so we subtract it. So if it's an accrual, we are saying we didn't receive a part of the income, but it belongs to this period. So we add the one that we haven't received that belongs to the period, to the current period, so that we put the actual that is supposed to belong to that period. So that with that, we are complying with what we call the matching principle or the accrual principle, whereby we are trying to match expenses to our revenue, our income in the same financial period. So this is what we have. So the 29,000 for settlement, sorry, for interest on fixed deposit represents what was received for interest on deposit, interest on fixed deposits, but it doesn't mean it's what is supposed to belong to the period. So we try to go to our balance sheet account section. You see that we're given fixed deposit for Allied Bank, which is 12% per annum, 200,000. So we can now be able to calculate and find what was supposed to be for the period and then compare with what was actually we calculate what was supposed to be received. That's our interest on fixed deposit using our 12%, and then we compare with what was actually received and see if we received in advance or it was an accrual of an income. So we go to HTML information. Let's see what is it saying about fixed deposit. But if you come here, information 2, it says provide for the outstanding interest on the fixed deposit. Note on 1 April 2021, the interest rate was increased from 12% to 15%. So calculate 2 different fixed deposits before the increase and after the increase, and then we add the 2 to get the total interest on fixed deposit. So let's find out about the number of months that we have before the increase, and that is using 12%. So we can just maybe say before it's using our 12%. Number of months that we have, it was from beginning of the year, it's 1 July to 1 April. We have how many months? We have got we are saying April to June, sorry, April to June, May, and then June. So we've got 3 months that we have, that is after the increase. So after it was not 15%, and we have 3 months. So it means minus 3, you get your 9 months, which is 9 months. So this is how we are going to calculate it. Then we look now, the amount of fixed deposits is not changed. We are just going to use the same amount of fixed deposit, which is 200,000. So we are going to say, for our calculation, we can just say, we'll start with before, and we are seeing that the amount of fixed deposit that we are given is 200,000. We are using 12%, so it's 12 over 100 times 200,000. Then we go with 9 months, so we multiply by 9 over 12. And see what we get before. So we can just try to see what we get there. You see that you're going to get your 18,000. So this one becomes 18,000. And after the increase is not 15%, so after we are now saying 50 over 100, and then multiply by 200,000. and you multiply by 3/12. And then the figure that you are supposed to get by so doing, you're supposed to get 7,000 the total interest on fixed deposit. So if you add 18,000 plus 17,000, 18,000 plus 7,500, you get your 25,500. So this is the interest on fixed deposit, which is supposed to be for that period. And if you go back and check, you see that what was actually received for interest on fixed deposit is here, we got 29,000. So we received more than what was supposed to be received. So income are received in advance. So we want to see by how much did we receive in advance. So we're going to say 29,000 minus 25,500. And then you calculate that, you see that the answer that you're supposed to get. Let's just try to see what do we get. 3,500 referred to in our note that they are saying provide for the outstanding interest on the fixed deposit. Provide for the outstanding interest on the fixed deposit. So this is the part that we are saying should be provided for. So basically now on our answer section, we are so as we are saying what is supposed to be for the period is 25,500. And what was actually received is more than. So it means we have to subtract 3,500 from what was actually received so that we get back to 25,500. So in our calculation in brackets, we're going to say 29,000 minus 3,500. So by showing this 3,500, we have provided for that amount. So we go to our answer section. We are seeing interest on fixed deposit. So for you not to confuse yourself, you can just start by entering the actual amount that is supposed to be for the period, which is 25,500. Then you put it in the column. And the workings that we are going to do are supposed to lead you back to the actual figure. So we are saying 29,000 minus 3,500. So basically, this is what we get. Then from there, we check other income that we have in the question. It is also good. So we got rent receipt with an amount of 36,000. But obviously, we go to additional information again and try to see what actually do we have. So in terms of rent, if you go to additional information number 3, come here, we've got an explanation of rent. Saying rent has been received until 31 December 2020. There has been an increase of 10% implemented on 1 January 2021. So we've got an increase again. So we need to count number of months before the increase and then after. So also the percentage, we take note what was the percentage before and after, but we're told that it increased. There has been an increase of 10% implemented on 1 January. So it means the percentage that we are having, we are having our 10% increase. The first period was from 1 July 2020, when the year is starting, to 31 December 2020. So from there, we can now be able to count the number of months that we have, whereby we are saying the whole of July, August, September, October, November, December. So we've got 1, 2, 3, 4, 5, 6. So we've got 6 months before. So here we minus 6, we have also 6 months. So this is the proportionate distribution in terms of the number of months. Then on the calculation, now we are saying what we can try to see in terms of the calculation that we have. So according to our information, it says rent has been received up to 31 December 2020. So it means the rent that we are given here is to 31 December, which is 36,000. And we have 6 months for that period, which is related to 36,000. So to get the monthly rent, we are going to say 36,000 divided by the 6 months. And what are the increase before the increase? So rent after the increase per month is going to be 6,000 times, remember, we are supposed to say before the increase of 10%, we add 10%, it becomes 110%. and then we make it a decimal, we divide by 100, it becomes 1.10. So you are going to multiply by 1.10 to get the amount after the increase. So we can just calculate from there. Let's see what we get. So you are going to get your amount is 6,600. So we have 6,600 as the representation of after the increase. So the question is saying there has been an increase. We have got 6 months again giving 6,600. So to get the total amount of rent, we are now saying the 36,000 for the first 6 months plus after the increase, it was not 6,600 per month times 6 months we have after the increase. And then we try to see what we get there. When we multiply 6,600 multiply by 6, you're going to get it as 39,600. So here you get it becomes 36,000 plus 39,600. So we add the two to get the total rent received. That is supposed to be 6. Add that 6,000. You are going to get your answer. Your answer is 75,600. So here we have 75,600 representing the rent received. And the rent you received is supposed to be for the period. So in our answer section, we're just going to summarize this working by saying 36,000 plus 39,600. So you go to your other section, then we are saying rent received. So in brackets, we are saying 36,000 plus 39,600. We add the two. We're going to get 75,600. So this is what we have. And then obviously before you proceed, we also have some income that we can identify. We can just go to our ordinary account section and try to see if we've got any other income. Remember, we are at receipt, so we can just go down to see what can we have. Which we can include under other income. We see that we do not have any income that we are seeing. Then from there, you go to additional information. There might be an additional income that might be mentioned in the additional information that you also need to check. So you just need to go through your information that you're given. You are not having any income that is there. So we also have another item that you need to just check before you leave the other income section. That is provision for credit loss adjustment. So we are saying we have to check for provision for credit loss adjustment. So we know that provision for credit loss adjustment after you have calculated it, it can be an increase or it can be a decrease. So we know that if it's an increase, it is an expense. And if it becomes a decrease, it's supposed to be an income. And if it's an income, we then put it under other income section. So you need to verify it before you leave the other income section to see if it qualifies under other income section. So by calculating it, we're going to calculate the level of provision for credit loss for the current period. Then we compare it with the previous period level that will be given in the pre-adjustment trial balance. So for the current period, if you go to information given, information 5, it reads adjust the allowance for credit loss to 5% of trade and other receivables. So basically on the calculation, we are going to say 5%, which is 5 over 100, and then we multiply with the trade and other receivables that we have been given. Sorry, the trade receivables control. There's a figure that we'll be looking for, which is 27,800. So 27,800, but we check if you've got any further credit losses if you could any further credit losses, we need to subtract them from this figure, then you use the net figure. So if you come in, you see that on top on item 4, we put FP John, the data was declared insolvent, so the debt of 3,900 was written off. So this is a credit loss. So you need to first subtract 3,900, and then the net figure we multiply by 5%. So we are going to say trade receivables control 27,800. 27,800. So in brackets, and then we subtract the further credit loss that we are given, which is 3,900. And then I'll see what we get there. So we can start by subtracting 27,800, and then you subtract 3,900. Then the net figure that you get is 23,900. So here you are going to say 0.05 as a decimal 5%, and then multiply by 23,900. So you multiply, you're going to get 1,195. So this is the current period level of provision for credit loss. So you compare it with the previous periods, which will be given in the balance sheet account section, which you are given here is the allowance for credit loss 2,500. So this one is the previous period. So we are saying it was a movement from 2,500 for the previous period to 1,195 for the current period. So we see this is a decrease. So we are here, which is income. So it's about putting other income. So we calculate now the decrease by saying 2,500 minus 1,195. And you're going to see that you're going to get your answer is 1,305. So this is the decrease which is supposed to be under income. So we come here. Now we are going to say allowance for credit loss adjustment. Allowance for credit loss. And we come working, you're supposed to put it in brackets by saying 2,500 minus 1,195. So that's what we have. So we have exhausted what we have in terms of other income. And we can add to get the total for other income. So by ending, we are now saying 25,500 plus 75,600 plus 1,305. And then you get your total for other income here, which is supposed to be 102,405. So basically, this is what you have. Then the other income figure, you're supposed to add it to your gross profit to get your total, which is supposed to be gross income for the year. So here we see we have the description of gross income. For the year, whereby you are going to say 333,270 plus 102,405, and then you get a total for your total is supposed to come here is 435,675. So basically, this is what we have on that section. So from there, we move on to less distribution. Less distribution. Administrative. And other expenses. So you're supposed to put the total here, but we are going to list them briefly. So we can go to our nominal cost section and try to go down section for them. So we start here, we've got carried on sales, it's part of that. We've got 18,400. But before you put 18,400, you need to go to Excel information to see if you've got anything that is going to adjust this figure. If you don't have, you put it as it is. So in this case, we are going to put, we're going to transfer it as 18,400 since we don't have any adjustment. So we're saying carriage on sales. And the figure that we have for carriage on sales is 18,400. Then we move on to the next credit loss, 9,850. But if you go to the information, we've got a further credit loss that we saw when we were calculating provision, the allowance for credit loss adjustment. So we've got a further 3,900 that we need to add to that one that we are given. So I'm going to say 3,900 plus 9,850. So here you see credit loss. So in brackets, we are saying 9,850 plus 3,900. Then we are going to get a figure is total is 13,750. So from there, we can also try to go to the next one. After credit loss, we put consumable stores 5,460. And remember, this consumable stores represents the amount that was bought. The consumable stores bought during the period is 5,460, but it doesn't mean it's the expense. The expense is the part of consumable stores that was used. So we can only calculate it by saying what was purchased minus what is remaining at the end of the period. So we're going to say 5,460 minus what is remaining at the end of period, which is 708, which we are given as inventory in the end at 30 June 2021, which is at the end of the year. So we come here, we say consumable stores. So in brackets, you are going to say 5,460. And then you subtract your 780. And then you get your net figure is 4,680. So basically, this is what we have. And then from there, we go to insurance, which is 11,300. So insurance, again, we check if you've got any adjustment about insurance. We go information by information, checking for insurance. We've got insurance has been paid up until 30 April 2021. So what does it mean? It means we have got other months, which are April, May, and June, 2 months not yet are paid for insurance. So the insurance that we are seeing here is for 10 months. The insurance that we are seeing here is 11,300, represents 10 months. So we're saying 11,300. We divide by 10, we get 1,130. So this is the insurance pay per month. So to get the insurance for 2 months, we just multiply by 2, and we are going to get it as 2,260. So this is the insurance that is outstanding. And remember, any amount outstanding or oil is supposed to be added according to the matching principle. So we add 2,260 to, so we can say insurance. So in brackets, we'll say 11,300. And then we get 2,260. And then the total that we're supposed to get is 13,560. And we move on to the next item, which is from insurance. We've got salaries, 192,500. But according to the question, we do not have further adjustments in terms of salaries. So we take it as it is. So here you see salaries. We have 192,500. And then from salaries, again, go to the next one. Water and electricity, 36,800. We do not have any further adjustment again according to water and electricity. So we take as it is. So here we're saying water and electricity. So the figure that we have is 36,800. And then from there, we can see that we have also another expense that we cannot see. It can never be mentioned under the nominal accounts section. Remember, we are moving on with the nominal accounts section. We have carried on purchases, we have already adjusted input duties, already adjusted interest alone, we adjusted at the end of the statement of profit and loss mentioned under the nominal account section. That is depreciation. So you can only find it in extra information, which is here. So in terms of depreciation information that we are given, information that we are given reads non-current assets must be depreciated as follows: equipment at 20% per annum according to the diminishing balance method, and then we've got vehicles at 50% of cost. Then not a vehicle with a gross carrying value of 135,000 was bought on 1 January 2021. So we need to calculate depreciation. So we can start by depreciation of equipment. So we can just say depreciation of equipment. So on equipment, depreciation on equipment, we are being told that it's on diminishing balance method. And we know that diminishing balance method, the formula that we use is percentage times carrying value. And carrying value, we get it by saying cost minus accumulated depreciation. So first of all, we have to find the carrying value. So carrying value of our equipment, we say, and remember, you should also check if you've got additional equipment that we have during the year. You see that we do not have only have a vehicle that was bought. So we are going to check the figures that we have there. They represent equipment for the whole year. So we have got 480,000 as the cost minus accumulated depreciation, 96,000. So we are going to say our rate is 20%. So we'll simply say 20% is a decimal, 0.2 times in brackets our cost of equipment is 480,000 minus accumulated depreciation, 96,000. So you can calculate it as it is and see that the answer that you are supposed to get there, we try to see what are we supposed to get. We can just try to calculate it. We get 76,800. So 76,800. So this is the depreciation for equipment. So we also have a depreciation on vehicles. So depreciation on vehicles, we also check now, but for vehicles, we've got an addition. So if you have got anything in terms of addition, we need to calculate the depreciations separately. The addition part separately, and the ones in terms of the vehicles that we had for the whole year separately. In terms of the number of months that they stayed, they should be classified according to the number of months stayed. So this vehicle that was introduced during the year only stayed from 1 January 2021 to 30 June 2021. So obviously, from 1 January 2021 to 30 June 2021, we have got 6 months. So we are going to say it's 15% of costs. So we are saying 15% on 135,000. So we are saying depreciation for new vehicle. New vehicle, we are saying 15%, which is 0.15 as a decimal, times 135,000. And then we said the number of months, we have 6 months. So we multiply by 6 over 12. And we see what we get there. We get 10,000. Uh, 10,125. So this is for the new vehicle. So for old vehicle, that stayed for the way. I remember for old vehicle, we are given the vehicles having 920,500. But inside 920,500, remember these are balances that we have at 30 June 2021 after the new vehicle was purchased. So it means inside our vehicles cost 920,500, there is a new vehicle that came during the year of 135. So we have to remove it from 920,500 to get vehicles that stayed for the whole year in the business. So we are going to say 0.15 times 920,500, and then you subtract 135,000. Then the answer that you get represents for 12 months because it's on annual basis. Then the vehicles that we get there were there for the whole year. So if you calculate it like this, you see that the answer that we are supposed to get It's supposed to be 117,825. So we can just try to confirm the calculation, whereby we can start by subtracting 920,500 minus 135,000. And obviously we get 785,500, and then we multiply by 0.15. We get 170,825. So this is depreciation for the new vehicle. So the old vehicles that was there for the way. So you add the two, this one and this one, to get the total depreciation for vehicles for the year. You now say 10,125 plus 170,825. So we can see what we get there. Then the other that we are supposed to get is 127,950. So here we have 127,950, which is depreciation for vehicle. So to get total depreciation now, we are now saying 76,800 for equipment, 76,800 for equipment plus 127,950 for vehicles. So we come here, narrate our depreciation, and whereby you say 76,800 plus 127,950. And then we are going to get a total of 204,000. 204,750. And that's how we try to confirm that calculation. So this is what we get, and this becomes the last expense that we have. So you are now supposed to close. Then we close here again. Then we get everything that we have inside the box. And the answer that we get will come here is our total for distribution, administrative, and other expenses. And if we add to see that the total that we are supposed to get is 484,440, which we are saying less, so we are subtracting. We can just subtract it. So from there, we are supposed to less finance costs. Here we are supposed to less finance costs. So finance costs comprise of our interest on loan. So we're going to say interest on loan. Interest on loan again is mentioned, additional information. We need to go there and see what the question is saying about interest on loan. So it's saying additional information number 8. Number 8, that's where we've got information on interest on loan. So saying the interest on the loan is still due. The payment of 60,000 was made on 3rd September 2020. So if you come there, you see that loan balance that we have, it's here. We're given it as 240,000. So we come here and we see that we have adjustment trial. But this was the loan balance at the end of the period. So if we had a payment that was paid on 3rd September 2020, it means before the payment, it was 240 plus 60. It was now 240,000 plus 60,000 plus 60,000. Remember, whenever there's a payment is made, it reduces. So 240,000 plus after it was reduced. So before it was reduced, it was now plus 60, and you are going to get 300,000. So we need to count the number of months that we have using 240 and the number of months for 300,000. So 300,000 was before payment. So payment was made on 3rd September, getting the year starting 1 July 2020. So you're saying the whole July, August, September. So 300,000 was for 3 months. Which means this one is 4 minus 3. It was for 9 months. So that's how we are just going to calculate it, whereby we just try to bring it down. We can just create some space there. So remember, the percentage for interest on loan, we are going to get it here. We are given interest 4%. So we are given our interest on loan is this one is fixed deposit. Sorry, interest on loan is here. We can just maybe try to bring it up. Loan trust bank 18%. So we are using 18% is our interest. So we are going to use our 18%. So we say 18% is 18 over 100. That was before the payment. 18 over 100 chance. For the payment, it was 300,000. It was 300,000. And then the number of months with 3 months. So we say times 3 months. We say over 12. When we multiply it like this, let's see that what we get there. We are going to get 18,500. Then we check now a calculation after payment. It was again percentage is the same, 18 over 100. Multiply by it was now 240 after the payment, 240,009 in times 9 over 12. Then from there we can now be able to find the correct answer is supposed to be 32,400. So we add the two, we are supposed to get the total interest. We see what do we get there. We can just verify our calculation on after. We are saying 0.18 is a decimal for 18 over 100 times 240,000, and then multiply by 9 over 12. And then we get 32,400 the same two before. So to get the total, interest on fixed deposit, sorry, interest on loan, total. So our total, we are now saying 13,500 plus 32,400, 1,900. So this is total for interest on loan. So we're just going to summarize this working in our answer section whereby you're saying 18,500 plus 32,400. And then we get a total of 45,900. So this is the figure for interest on loan. That is supposed to be also the total for our finance costs. So it's supposed to come in line with our finance costs. So obviously, we are supposed to close. So 45,900 is supposed to come here and it becomes a negative since we are saying it's finance costs. Remember here we are saying less finance costs for 5,900. So to get our net figure there, which is supposed to be net profit or loss, we are now saying gross. Sorry, we are now saying yes. We are now saying gross income for the year 135,675 minus 484,440 minus 45,900. And then we get a net figure which is supposed to come here is our net profit or loss. But you see that we don't get a negative figure of 94,665. So we can show it in brackets. And on the negative. Remember, if it's a profit, it's going to be a net profit. So from there, you are supposed also to show other comprehensive income for the year. If you have other comprehensive income for the year, it's supposed to come in. Other comprehensive income for the year. And you see that in this question, we don't have anything. So in this case, you just put a dash. And then the final figure is supposed now to be total comprehensive income for the year. So in this case, it's total comprehensive and loss for the year. Since it's a negative, total comprehensive loss for the year which is also supposed to be the same figure, which is 94,665. So remember, we are saying 94,660 negative 94,665 plus 0, it goes back to negative 94,665. So this becomes our final answer. So basically, this is what we have, guys, according to this video. Hopefully, the video was helpful. And let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing financial accounting and more. Let's stay tuned for more videos to come. As for this video, I'm signing out.